This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Let's talk a little fintech here.
Switching
the company of the day is Broadridge. It's a publicly traded company. The ticker is BR. You put that into the Bloomberg terminal. The company's got $22.6 billion of market cap, and the stock is up 43% year to date. Joining us today, Tim Gokey, Chief Executive Officer of Broadridge. He joins us via Zoom from New York City, and I know the company held today an Investor Day, so we'd like to hear what's going on there. Tim, thanks so much for joining us here. Tell our listeners, our viewers, just give us kind of the 30-second overview of what you guys do at Broadridge.
Yeah, absolutely. Thank you, Paul and Jess. It's really great to be with you today. So as you said, we are a global fintech, and we really sit at the intersection of financial services. We power the critical infrastructure that really supports corporate governance in North America and around the world, also capital markets and wealth management. And we're sort of the behind-the-scenes player that makes that possible for many of our clients who are the largest banks, broker-dealers, asset managers. We have a unique network that really connects all market participants, including all public companies, through their broker-dealers to individual and institutional investors, enabling corporate governance, but also supporting capital markets and wealth management.
Tim, as Paul mentioned, you did have an Investor Day today. Walk us through what you can discuss when it comes to some of the business strategies that you unveiled.
Yeah, it was an exciting day, and I think we talked about that network I just described and how that has enabled us to build businesses over time. We talked about the consistent results that we've produced, 10% recurring revenue growth over the past 10 years, 14% compounded annual earnings growth over the last 14 years, and why we think the next 10 is going to be just as good based on some really significant trends and drivers that we're seeing in the market around the democratization of investing, the digitization of communications, and the acceleration of trading. And those are all areas that we've positioned our company to enable.
Tim, describe kind of the services, the products that you guys have at Broadridge. I know you're in communications. You also clear trades. Just kind of let us know how kind of you guys generate revenue.
Yeah, a couple of different areas. So in corporate governance, we provide a 24/7, 365 SaaS platform that takes in investor positions, reconciles them, sends the communications that public companies need to send to all of their investors for boards of directors elections, and then takes back and tabulates the results of those, provides end-to-end vote confirmation, and then provides all the building and sort of financials behind that. And so we're really the behind-the-scenes player that facilitates all the boards of directors elections. We also facilitate many of the meetings themselves. Last year, we did about 2,500 meetings virtually on our platform. And so whenever you get a communication from your broker-dealer, either digitally or if you're still getting it by mail, it's likely that it came through us. So that's a big part of our business. The other part of our business is providing technology platforms for capital markets firms and wealth management firms. And we really provide the underlying books and records, paying people their dividends, settling trades, clearing trades. So nothing that you would see as a consumer, but very important part of the infrastructure for many of the largest players in financial services.
Talk to us about how your company is providing guidance when it comes to the democratization of investing.
Yeah, and that's really, it's a multi-decade trend where over time we've seen the cost of trading and participating in markets for individual investors continue to get lower, culminating in really zero commission trading, which we have seen now. And also new products going all the way back to the invention of mutual funds and ETFs, but now managed accounts, direct indexing. All of that is drawing more participation, more people participating, and also them holding more individual positions. And we get paid per position because we're communicating whether you hold one share of Amazon or 100, that's the position. The number of investors, the percentage of adult age U.S. adults that own at least one share has gone from 49% 10 years ago to 59% last year. So We're seeing that increased participation, also an increase in the number of products that people are holding. And so that is really causing companies to want to engage with their retail shareholders more. It's causing a demand for new tools. That's why we are introducing a lot of digital tools to help wealth management firms facilitate that engagement with their clients.
I'm glad you brought up tools, because AI tools is part in your notes. We've talked so much, Paul and I, about the AI frenzy here. Talk to us more about what that means when you're talking about AI tools as far as helping your products.
Yeah, we are, and as is everyone, we're investing a lot in AI, and we see it helping in a few different ways. So first of all, generative AI will just be part of every product in the future. It will be table stakes for most companies. And then beyond that, companies that have unique data will be able to really create creative products that help and provide them an advantage. Earlier this year, we introduced a product called Bond GPT, and it allows traders, capital markets traders, to ask sophisticated questions about bonds, which ones are available, their structure, details about them, which would be available to look up and use your keyboard to consult different databases and find the information. But that takes time, and so we can take complex queries that might take even an experienced trader many minutes to do, provide that back in seconds, and those kinds of pre-trade analytics make the whole process easier for them. That's just one example. We're introducing generative AI really across our product suite.
Hey, Tim, when I was on the street, we settled our trades T+7, then it became T+5. Now I think the kids are doing it at T+1 and maybe T+0. How does that impact your business? That's got to be a technological nightmare.
Yeah, it is. So we're currently, the market is at T+2, and it is moving in May to T+1. And so we are working with all of our clients on facilitating that change and helping them do that. There's a whole series of industry testing that's going on even as we speak. And I think that the limits of today's technology make T+1 will be fine. The move to T+0 will be harder. People are beginning to talk about that. There's also a lot of behavior change that is required, because one of the things that happens between T and T+2 is a lot of interchange between the person that made the trade and all the participants to confirm that it's actually the right trade and it gets allocated to the right account. And now all that will have to happen in sort of half the time.
All right, well, I was on the floor of the New York Stock Exchange when it crashed in '87.
Wow.
We spent weeks trying to match tickets, and it was a disaster. I can't imagine.
What a day.
Boy, we needed the technology back then. Hey, Tim, thanks so much for joining us. Tim Gokey, Chief Executive Officer, Broadridge, a fintech company, joining us on Zoom from New York City. Yeah, it was a disaster. I can't remember the numbers, but typically we'd have mismatched trades, call it 10,000 just at the end of the day at Payne Weber. On that October day, and then for weeks afterwards, it was, if it wasn't 10,000, it was 300,000. I mean,
Wow.
It went crazy. So, and it was like that every firm across the street. And you'd spend days running around to Morgan Stanley, Goldman Sachs, trying to find the other ticket to match. Like, I know I bought 300,000 X on here, but I can't find it.
Was that your first job coming out of college?
We were in a training program, and they yanked all the trainees and they threw them down to the stock exchange a couple of days before the day the market crashed.
So you were there right.
Yeah, because the volumes were just getting so big right in front of that day. And then it was just crazy. And then I think everybody turned around and said, I think we should probably think about investing in technology. That might be our friend. Writing a blue ticket for a buy and a pink ticket for a sell is no way to run a business.